What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to be doing a quick update on a few different EV stocks that you guys have been asking me to speak about since coming back and making these videos, baby. So the main things we're going to be speaking about today is going to be Chargepoint and also Mullen, because they have an important thing happening tomorrow, and there's been some interesting options activity early on in the week that could lead to some big moves either in the upwards direction or the downwards direction. I'm just going to give my thoughts on them in the short and medium term. Same for Chargepoint, and then there's a couple of other bits and pieces to speak about, such as what's going on with the Chinese EV stocks. You see Nio up over 5%, and Li and xpeng both up over 8% as of this moment in time. Some juicy moves. So really quickly, my friends, can I ask you to hit that juicy like button? I appreciate everybody who's doing that since we come back. Really does help me out a lot. Really does motivate me to keep it going, baby. And please, if you're new around here, feel free to subscribe for more juicy content. So we're actually going to start off speaking about Mullen, because I read one comment in particular asking for my thoughts on them, and I figure why not, because we were talking about them a bit before I left previously. Monday, November 21st, we got this volatility watch on Seeking Alpha. The option trading was elevated for Mullen Automotive. Now, if we take a look at Mullen's chart here, you can see that it has been a very, very poor week since then. That's the 21st. Peaked out about 26 cents a share. Now it's all the way down at 19. A huge drop off. Only recently, they finally got their second wind back towards, the end of October, where they went from 20 cents a share all the way up to 60 cents a share. But they have given back all of that value and then some. They are still extremely volatile, and I think that's why a lot of people still are interested in them, just because there is fast money to be made both upwards and downwards if you get on the right side of the trend. I don't think that is going to stop anytime soon, realistically. Now, one thing I'd like to point out, guys, is this: MULN Stock has been dipping ahead of November 30th deadline. Okay, so will Delpac order 300 vans by November 30th? This was always one of the shorter term, catalysts for Mullen. In July, Mullen stated that it could deliver 300 Class 2 cargo vans at the request of Delpac. Mullen has not released any updates on the potential delivery, and I mean, tomorrow is the deadline, so I think at this stage people are assuming that it's not going to happen, and that is definitely not going to do a good thing for consumer sentiment or for the stock's price as part of that. And shares of Mullen are down over 95% year to date. I mean, all you have to do is zoom out on that chart and you can see the absolutely crazy ride. I think most people have only really started to focus on them since they've been in the $1 or $2 to even $3 range, but especially now that they're trading for literal pennies, sub 20 cents, they're still piquing people's interest again. You do still see quite a few people about them speaking on social media websites. I'm going to say right now, where the state Mullen is, I would have no interest on playing them long, short, or medium term. Now, hopefully it's one of the stories that ends up, working out in the long term, but for me right now, it's just not looking that way. Some better news a couple of weeks ago was Mullen brought in the funds to close the electric last mile deal, which again was a catalyst for the company. But, there wasn't too much of a reaction based off of this news coming out. A slight spike pre-market trade and then into the early market hours. And then again, all that value given straight back. Now, the one thing that's actually relatively concerning is this. There was a 14A definitive proxy statement came out recently, and I've highlighted a few things that are important for any shareholders or potential shareholders to be aware of when it comes to investing or your investment that already exists in Mullen. Proposal number 1 in this proxy is an amendment to the company's second amended and restated certificate of incorporation, which amendment will not be filed prior to later of March 6, 2023, and 180 days after such a date, which depends on NASDAQ stock market, granted the company their extension, to effect a reverse stock split. Now, this is something that's always been spoken about with Mullen, but anyway, we're finally getting the definitive proxy here, of their outstanding shares of common stock in an amount not less than 1 for 2 shares and not to exceed 1 for 25 shares, with the exact ratio to be set within that range at the discretion of the board of directors. The company will not file such amendment before May 1st, 2023 to effect the reverse stock split unless needed in order to maintain continued inclusion in the Russell 2000, which requires a minimum stock price of $1 a share. So, I mean, my best guess would be somewhere in the realms of a 1 to 10 split, unless Mullen are to give up a further 50+% from where they are right now. And then we could genuinely see that 1 to 20 or 1 to 25 split. But again, the whole reason they're doing it is to keep inclusion in that Russell 2000 and furthermore the NASDAQ. We'll see if we go down to proposal number 2, another quite bad thing for investors. An amendment to the company's second amended and restated certificate of incorporation to increase the aggregate number of shares of common stock per value per share that the company is authorized to issue from 1,750,000,000 to 5 billion shares. So again, huge dilution if needed. And proposal number 4, a proposal to approve for the purpose of complying with NASDAQ listing amendments to a securities purchase agreement to provide for the issuance of 150 million in notes and up to 190 million in additional sales of Series D preferred stock. So this here is pretty much the primary reason. Well, it's the nail in the coffin for me personally on why I would not have interest in playing this in the short term. Now, I may keep covering them if enough people on the channel want me to do so, because I know there are still a lot of people following them quite closely. And I'm not trying to rain on anybody's parade, because I am aware of the actual catalyst and the actual underlying business of Mullen. And again, it could be one of those big turnaround success stories. It's just not for me right now, especially not in the current climate of stocks in general, but particularly, you know, really small cap growth stocks, especially not when I'm seeing a proxy such as this one coming out. And, you know, more than likely failing to meet agreements that could have happened as early as tomorrow. Again, you look at that stock chart and it just does not look like it's going to be an easy stock to play in the upwards direction. Again, it's going to be a lot easier to make money shorting these guys even after coming down this far. So yeah, it's one that I personally am steering clear for. Sorry to all of the Mullen bulls out there. Now, the next one I want to speak about is Chargepoint. Some interesting things have happened since I've been covering these last. We can get rid of these at this stage. We have our medium-term areas of support and resistance drawn out here. There was a big fight in the upward direction, but you can see trends were broke and a downward trend continued. But again, they're staying right on that area of support. This is actually where I last bought this stock, 24th of January. You can see we went from that 11-ish range all the way up into the 20s, all the way back down to the 8s, all the way back up to the 20s, and back again. So, Chargepoint, I think I've always been really clear on this channel that I love them long term. I really, really do. I mean, we were initially buying them literally back here. It's been a fun ride. Took a little bit of profits out of these guys a long time ago, but it's getting to a stage now where if these movements keep becoming so obvious and if they keep following trends so obviously, I might start getting in and out of Chargepoint a little bit. Now, honestly, guys, I want to be in Chargepoint for the long time for numerous reasons that I have covered on this channel in the past. But when you're seeing things like this happen, you know, 2 to 3 times a year, and there's money being left on the table to a huge degree, I don't see what is wrong with getting in and out a little bit more often. I would watch them extremely closely right now, again, considering they are at that support. The RSI is pretty much neutral. You could argue a little bit oversold, but very, very little. There is no clear short-term direction. You can see there is fight to the upwards and downwards direction. There is still huge 20 and 30% swings across the span of a week or two with this company. It's volatile. October CPI reports continue to report elevated demand thus far at 0.5% sequentially and 8.4% year over year, with most automakers unable to produce EVs fast enough for the growing back orders, which again is a good thing for a company like Chargepoint, and they are so established as it stands already. General Motors recently guided 1 million of EV production capacity by 2025, Ford pushing for 2 million by fiscal year 26. With an increased number of EVs on the road, it's no wonder that Mr. Market understands the massive value and relevance of Chargepoint through the next decade, the biggest player in this segment. By October 2022, Chargepoint is already operating over 200,000 charging points in North America and 16 EU countries, indicating a tremendous increase of 69.49% year over year in the installed base of network ports. Absolutely huge, and notably 30% of those are in the EU, with the management guiding further expansion over the next few years. So people do have to understand that Chargepoint is still at a very early stage of its life cycle as a company. It's still a ways away from real profits. That's where they stand right now. There's going to be more pain in Chargepoint's short and medium term future. Thus me saying, you know, maybe it is not a bad idea to take some profits along the way and buy when it's looking cheap. Right now, is it looking cheap? I would argue yes, in comparison to a lot of other deals on the market. Does that mean I think it can't break this support and go lower? Absolutely not. It most certainly can, in my opinion. And who knows, we might come all the way back down to those mid 80s and set an even new longer term area of support. I don't necessarily see why that has to happen, but in this current market, you don't need to be able to justify things that strongly. Chargepoint, all in all, as a company, I still love. When I look at them fundamentally, I really like what they are doing and what they have done over the last number of years. And if they continue to execute the way that they have been doing so, I do think that they have a very, very bright future. Just one little one I wanted to point out was this: Lordstown Motor Stock leaps as first deliveries leave Ohio factory. You can see that they're currently up 8.7% as of recording this. They were up about 9% pre-market. I saw them down as low as up 2% during trading hours. So these guys are volatile. I expect the volume over the next couple of days to be quite large. Again, it's not one I'm looking to jump back into whatsoever. And I think when people realize, or when we get given the information on how small these deliveries actually are in regards to what they need to do. We can even see a pullback to the tune of this. I think it would be relatively easy money shorting them after this move upwards, to some extent at least. But yeah, I just wanted to point that one out there because it's a considerable move in the EV market. And then the other thing is we can see Chinese stocks bouncing back yet again. Nio 5.5%, Li 8.5%, xpeng 8%. Given everything that's going on in China, I made a video on this yesterday specifically in regards to Nio. I am very surprised to see these numbers happening. I don't know if I could see them continuing without a pullback happening. And again, I think any of these kind of overreactions we see in the upwards direction are usually followed by that downward. So seeing all of this green, yes, it's nice today, but I don't know if I see these profits staying around for the considerable period of time. But anyway, my friends, that's a quick little update on a few of our EV stocks on this channel. And again, we're going to have more in-depth content on all of these stocks coming soon. So if you watched this video all the way till the end, you probably enjoyed it a little bit. Make sure you're subscribed for more videos, and please do leave a like to show me you enjoyed it. It helps me out a lot, my friends. Anyway, guys, I hope you all have a beautiful, blessed day. I'll see you in another video very soon.